Okay, Elina Pedersen, co-founder of your Bourse. How are you?
Very well, thank you. How are you, Jan?
I'm fine. Are you enjoying this event?
Oh yes, most certainly. It's actually one of my favorite events.
Nice to hear. So you just came back from a panel about AI in trading platforms.
Yes.
What are your main takeaways from this panel?
Oh, I think there are a few. Well, first of all, that very often AI is just the buzzword, right? So
Yeah.
a lot of those things are really just machine learning algorithms that's been around for, well, decades, and it's been used in trading, it's been used in market making, it's been used in predicting certain patterns for really decades by banks and financial firms. Now, one thing that did change is that now there is enough computing power and enough frameworks to allow for smaller companies or, let's say, individual traders to be able to analyze the data and build models and educate models and then implement it in their trading or companies.
So how is the trading scene adapting to it? What changes are happening now?
Well, it depends how you look at it, right? So for us as a trade engine, an ultra low latency trade engine, we've always been ready for it in a way, because we know, like, HFTs use models, right? So we are ready for it. But it's a lot about being able to process big data and being able to offer that big data to the data owner, so to say. So every broker generates, we're not even looking just at tick data, which is, again, big data, but any broker that is providing trading services generates a lot of that data. And it's about being able to access it, normalize it, use it, derive the information that is needed, and then implement it.
Interesting. You recently published an article in Finance Magnates.
You published an article.
Highlighting the importance of liquidity providers and trade tech for brokers. For the one or two people that still didn't read the article,
Okay.
what are your main tips? Why is this so important?
Well, I think the most important part of it is that brokers should understand the difference at the end of the day between the trade platform and what is the function of a trade platform or trading front end and an actual trade engine, trade processing, order routing, right, and pricing. So trade platform, I would say, yes, it's a trading system, but it does a lot of important tasks on its own, such as calculating margin, for example. A lot of things are running in it, but it's not necessarily the place where you should be pricing, right? So you need to price into it, but where you should be executing actually is the right word. It's more about the latency. You would see a lot of abusers trying latency arbitrage, and it's around brokers being able to offer competitive pricing, and you can only do that with real prices that they can trade on. And if it's just a price feed, it becomes a lot more difficult, and without being connected to an execution venue.
So choosing the right liquidity provider can make or break for a broker.
Yes, most certainly, especially when it comes to brokers who are able to categorize their clients, and actually I think every broker should look into it, because unfortunately, again, there's still brokers who just internalize everything. Internalize everything without understanding what is their risk reward. And sometimes they take unnecessary risk where they could be making more on that by just simply STPing the trade to the correct provider execution venue. Now, when we look at it, then very often brokers misinterpret the data, the client data that they have, and for some reason they choose to sit on exposures that they should be hedging out, and it can definitely make or break a broker.
In that context, you have a new offering for brokers now. I saw it on your booth earlier on. Can you elaborate? What will it allow broker to do?
So do you mean like the premium liquidity provider?
Yeah.
Oh, okay. Right. So in general, your Bourse is quite an advanced trade execution engine, right? It's the matching engine, it's ultra low latency, and there are lots of features around it. Mm-hmm. We do find that the brokers that use us, and we're talking 100 plus clients, are more sophisticated in a way. So very often, when it's a startup, a lot of things will be bootstrapped. So it will take a bit of this, is this necessary, is that necessary? And often trade systems are overlooked, where in fact it's one of the most important components. So with a few of our partners that also use your Bourse, we came up with an idea that if they become a client of one of the premium liquidity providers, then we will give them like a starter package. I don't want to say a limited version. It's a set of components that they need to start free of charge, just to really get to help those brokers start in the most appropriate way, if that makes sense.
And this offer is time limited or?
No. We have it. So it's ultimately the only limitation that is on that offer is that the broker needs to be under 1 billion of volume. Right. So if it's a broker that falls under that category, then it doesn't matter if they're a startup or if they've been operating, maybe executing within the trading platform. They can benefit from that offer.
Looking into 2025 next, which starts in a month, what are you seeing? What are the new trends in your company's, let's say, area of coverage? What will be interesting for brokers?
Well, I personally think that with the current developments in the world, definitely the volatility and good times for standard retail brokers are coming, which is great. Although I think what we should finally acknowledge is that the majority of trading volumes are currently generated in gold.
Yeah.
And it's quite a predictable asset. Right? So, and based on that, we should make sure that our risk management and our trading strategies or risk management strategies reflect the most traded instruments. But I also think that the buzz around crypto and crypto trading is coming back as well.
Obviously. Okay, Elina, thanks very much for this interview.
Thank you for having me.
Thank you.